market reforms, from PSU delisting and startup ESOP clarity to regulatory reliefs for REITs and InvITs. My colleague Sajeet is now joining in to give us some of the key takeaways. Sajeet, good morning.
Morning, Puneet. The SEBI board meeting had quite a few decisions that came out of the board. The first being the boost to the reverse flipping, which is basically companies incorporated in overseas, Indian companies or Indian startups or incorporated in overseas jurisdiction. They can now change, come to India and and change the registration to India. And for that, there has been some ease which has been done. It has been decided to provide incentive to startups to change incorporation from overseas to India, allows compulsory convertible securities to be offered as part of the OFS when these companies are coming out with an IPO in India, and allows promoters to retain ESOPs as long as they are vested 1 year prior. The second one being the mandatory Demat in IPOs. Currently, it's not mandatory, so in many IPOs you will see some of the investors or promoters having physical shares. Now it will be mandatory for all IPOs to have shares in Demat form. The third is easy filing of QIPs. Currently, rights issue have a very easy filing information memorandum, and it's not so bulky. But QIP information memorandums are bulky, and since these companies are already listed in the stock exchanges, they've decided to do away with a lot of documentation and make it very thin and easy to come out with filing of QIPs. The fourth one is a significant one from a government point of view. That's voluntary listing of PSUs. Many of the PSUs have government shareholding above 90%, and because the liquidity is not there and they may not be profitable, they're still listed on the stock exchanges, and that's one of the reasons why SEBI has now allowed voluntary delisting on a fixed price basis, and that would allow some of the PSUs, especially there are around 4 or 5 PSUs where such a case can be applied, and that can be done. The fifth one is big for merchant bankers, custodians and debenture trustees. They've been allowed to undertake activities which is not under the purview of SEBI as long as they are controlled by other financial sector regulators. They've also been allowed to take activities within the same licenses which is not under the purview of SEBI, but these are subject to some strict conditions and caveats and disclosures which they have to undertake. The sixth one is REIT and InvIT. There have been some streamlining which has been done over a period of time. Now the entire definition of public has been expanded. The second big thing is the net distribution allowed, especially in REITs and InvITs where the structure is often holding company and SPV, and this will allow for net distribution to be paid to the investors there. Seventh one is a long drawn thing, which is the NSCL settlement. The board of SEBI has approved the settlement which has been approved by the high powered committee. It's only for brokers where there is no charge sheet which has been filed by any of the investigating agencies. So any broker which has a pending case and there's no charge sheet by either an economic offences wing or any other investigating agency, they can come forward and settle the entire matter. There's a formula which has been arrived at and approved by the high-powered committee there. 8.1 is a working group which has been constituted for debundling of rates for clearing corporation. Currently, the rates are at the exchange level and we don't know how much of the cost is attributed to clearing corporation. The working group will look at debundling of those rates, look at how independently clearing corporation can be run with respect to the rates, and overall as of now the rates are at the exchange level because when one trades, that includes the cost which is assigned to the clearing corporation. So that's something which the working group will work on, and report will come in next 2 to 3 months there. Ninth one is on derivative trade. The SEBI has been saying that they're keeping a close watch on derivative trade. They've said that over the last few months, since November to May, when the new regulations came into being, retail investors have come down by 20%, and if required, they will come in further with some restrictions to ensure that there's no hyperactivity which is coming into the F&O space. And the 10th one is a little relaxation for the foreign portfolio investors, especially those investors who are investing only in government securities. Since India is getting into the JP Morgan index and the Bloomberg index for debt, they've aligned the entire KYC to the KYC which Reserve Bank of India requires, and thereby making it a little more less cumbersome for some of the FPIs who are trading in G-SECs in India.